Hi folks, this is Anne Marie trying to do a little bit of an afternoon report since the morning is so hectic for me. Don't really have the bandwidth to manage, but a lot of people have been asking about it, and it is good to look at these because, you know, at the end you can hold my feet to the fire and go, you said. So, and I don't mind that at all actually. I think I'm a bit of a junkie about being put under pressure. So here we go. All right, so here's what we're looking at. We've got upside momentum. We've had a breakout, a gap, and a breach that held. Now, I suppose part of this information that we are looking at right here occurred because of a squeeze. And that's going to keep occurring as long as people try to step in front of these trades. And by stepping in front of them, I mean positioning yourself short before the chart has had a chance to roll over because you want to sell a top. Now, that's a beautiful theory, and we all get a great big rush from it when we do it. It makes us feel very important and extremely wise. However, in the grand scheme of things, generally an inconsistent method, and I'm all about consistency. So that's the only way that you can actually make a living trading is being consistent. There's really no other way. If you want to swing for the fences all the time and enjoy doing that, then that's great. Probably going to end up feeding pigeons in Central Park. Just saying. So, that being said, let's take a look at what we need to do with this space. From a momentum perspective, we know I like to use the stochastic momentum index. That's the SMI right here. The MACD, which is hugely popular. Most of you who know me know that I am not particularly fond of the MACD, but it is very commonplace, and so I figured it'd be a good idea to show you how to use it if you're a little bit newer. So let's go through the really typical, the basic events. Most folks trade with the MACD crossover, right? So when there's a crossover event, it's a space to go long in the direction of that crossover. Okay? So a crossover here negative, you would be looking at shorting action, crossover here positive, looking at long action, so on and so forth. So, of course, in this case, you can see that it is completely inappropriate to take shorting action unless you want to sweat it out. And so, you know, you can't use one indicator by itself. If trading were that easy, we'd all be rich. But we aren't, right? A lot of us are struggling doing this for a living, and it's because we try to find one indicator that's a holy grail, and there really isn't one. If there's one close to it, it would be the SMI, but even that tells us some very, very specific things. So, that we can't just blindly follow it. All right, the steeper the slope, the more aggressive the move. The steepness of the slope defines acceleration of movement and true momentum, which is different to trend. I just put out an old video of that, and also tomorrow we'll actually be talking about that at the Festival of Traders at 6:15. So that's something that you really need to understand. Trend and momentum are not the same thing, and we use momentum indicators, and what we're trying to do is basically fall into a trend space, and that's not it. If you're looking for more information, go to investopedia.com and look up the definition of trend, look up the definition of momentum. You'll see that the two are quite different. All right, that being said, that's what we know about this. The steeper the slope, the more swift the move. The more shallow the slope, the more meandering the move. And on top of that, the closer we are to the zero line, the more likely the chart is to reverse. And that is because momentum is damp. And when momentum is damp, it does not have power on its side, right? Damp momentum is like the very end of the air coming out of a balloon. it doesn't have all that tremendous pressure pushing on it, and so it's quiet and a fizz, as it were. Okay, so those are some very important things that you need to learn about the MACD. If you understand that, then you can extrapolate from that if I am looking at undulation in a tight range between maybe, I don't know, it varies from stock to stock, 0.5, negative 0.5, whatever, it's close to the zero. We know essentially all we're doing is moving from support to resistance to support to resistance to support to resistance. Do not anticipate a breakout stage sitting in the center. That's not a good thing to do when you're staring down the MACD. The next thing, consider using the inflection and not the crossover to help you determine what it is that you need to be doing. Much more reliable than the crossover, and especially when things get very, very noisy, using the crossover is going to put you at the edge of every single move. If I put a crossover here and I trade, by the time I get here, it's a failed trade. This one says to go short, another failed trade, and then finally this one tells me to go long, and it tells me to go long right about here, three candlesticks before the end of the day, hourly. Okay? So you really want to look at inflection in very, very choppy markets, much, much better for you. All right, now that that's all said and done, what do we expect the motion of the market to do? This has been a failed breakout event for a long time. We've been a channel for a long time. What we should do, my friends, is return to the point of origin on the breach. A lot of us get very uptight about missing moves when in fact markets do actually retrace. Now if there's a very strong move, it is only going to come into this event right here. All right, somewhere around there is where it's going to come into. And if it comes into there and bounces, we know we've got upside momentum. Listen, pay attention to your momentum indicators. If you use the MACD to trade with, you better be in the direction of the slope of momentum. All right? Now, again, the MACD is somewhat unreliable in certain spaces. If you know what it is that you're looking for, you can't just look at this and go, okay, I'm going to go long or short just based on the color of this ribbon. It doesn't quite work like that. If things are trending very nicely, you can do that. But the second they fall into a channel or begin to chop sideways, you've got to look at it in a very in a much more refined space. Okay, so let's take a look at an extension of where it is that we see. Let's take a look at these pivots. We don't want to use monthlies. Let's use the weekly pivots. All right, and so, oops, I don't want to see all of those. Let's just take a look at one of them. 1 week, that is. Okay, so we're looking at the weekly pivot. We're up over R3. We're at the midpoint between, R1 and R2. This is the next space, 190.61. If it holds, the 50% rule tells us that that's going to take us there. I suspect rotation, but here's the thing. I've got a bias on rotation. I had a bias for it to fall into the channel. If it breaks the level out and you've got upside momentum, you are to kick your bias to the curb, or it's going to leave you crying because you did not get involved. And then you will wait, and then you will chase the position, and you'll end up upside down. I know that's a story that runs 100 million times over and over again in everybody that's ever traded. We've all done that. We just get over that the stronger that we get as traders. So these are the levels to watch in SPY in the coming days. Does it roll over and come back down into the 189.30, or does it hold above 189.90 and head into 190.50? Hard to say, can't tell, but that's exactly what you're going to look at. When you take the trade intraday, you're going to say, where am I going to? Now, for those of us, we had a swing SPY trigger a swing SPY long trigger. So we are looking at that. We did take profit and we have raised the stop up into break even. If you followed the directions there, that's exactly what you should be doing. And so that is really going to play itself out tomorrow. Let's take a look at the IWM. I don't want to spend 100 years doing these charts, and you don't want to spend 100 years listening. So let's get on with it. Same sort of sideways action here today. Big pop, gapping event right here. Where is frontline resistance for this chart? There's a gap. Probably going to fill that tomorrow. I would say we definitely have a shot. If this continues upward, we definitely have a shot at filling the gap right there. Right now, we are testing this region right here. I am just borrowing the line so I don't have to pull the tool out. That's where this is here, right? We're all testing that region. It's a little shy of that space, but that's what we're looking at, right? Sideways action. Let's take a look at what's going on here. This one, you know, the IWM underperforming horrifically, so it's going to have a little bit of a different formation as it tries to recapture. This obviously is a line where buyers have positioned themselves. If we are going to stage a trade, we probably want to make sure that it's going to hold. You know what, if you want to get really conservative, you can pull it down to that 111.17. If it loses this area, folks, that is an aggressive candle. It is going to rotate downward. All right? Is absolutely going to rotate downward and come into this gap where this is at 110.47. Charts are extremely predictable if we are paying attention to them within the frames of reference. And this is a very specific frame of reference here. It is filling in the gaps and working towards those things. This came in, filled the gap, moved all the way up. Now we have the sideways pressure. We have upside momentum, but a flattening fast SMI. The MACD tells us to continue to be long. Yes, indeed, it does. It does. Now, the SMI is showing some measure of weakness there, so we would have to pay attention to that. And frankly, if we came up and filled the gap here and then began to collapse, we would anticipate immediately a move back into 112.21. You can write that down if you like, and then down into 111.76 before we attempt to bounce. How do you know you're going to bounce or not? That's if buyers show up. Momentum is going to give you that hint. And if you bounce on something and begin to rise, then you are actually buying the lift off of support, not buying the point of support. Wow, I cannot speak at the end of the day. I seriously cannot. My brain turns to a pile of jello at the end of the day because trading is such an exciting space to be. Yeah, trading's pretty taxing, folks. It is. All right, taking a look at the cues. The cues, let's go out here. All right, here's a weekly look at the cues. Now we can see all kinds of momentum messing around here, right? Big drift downward. Some of us look at it and go, oh, there's the short. But here's the thing. When the SMI is doing this, and one of these is way up in a trending zone, and the other one, the fast one, is far away, it is going to change direction and inflect into the slow SMI. That's what this motion does. That's just what it does. Now, whether it collapses up there or not gives us a lower high, I don't know. Right now, we have lower highs. We just broke the low a few weeks ago. We're coming back up into this region. We've been long. This chart has given us weeks of long activity for good night since the beginning of the year. We haven't had a messy patch like this since November of last year, and this trend line is extremely far away, right? I have no idea where the 50 daily moving average is. It's probably really far away from where this chart is right now overall on the weeklies. That being said, let's get in a little bit closer to what it is that we're looking at. We're going to find out that this chart still not giving us a super active breach at all, right? It's really not. This is an inside range, and this bigger motion here is an outside range, and we are still sitting right here. We have not broken away out of these bigger regions like the other charts have. So not really sure what it is that we're saying there. Here's the thing though. This still showing upside momentum. The sloping action, listen, see, that is a slope that is pretty solid, so it should breach and then come back for the retest. Where are the breach levels? Well, this is 85, this is 88.30, right? So you'd want that there to look to moving out, and then you want to take a look at the congestion event to see what's going on here, right? There's some trouble at 88.48, pretty noisy, and then we've got some more trouble somewhere around 88.75, and then we can go up into 89. All right, those are the regions that we'll be looking at to the upside. This chart has a lot to prove, essentially, because it's still stuck inside of this tight range. There's a gap here. Gaps always create weakness in the direction that they have come from, meaning if I've got a gap below, there's weakness below that the chart has got to come fix from a market auctioning perspective, right? Which is the reason that most gaps fill. It's not because of anything magical, it's just simple market auctioning theory, right? So market auction theory says that we should fill in these spaces to create balance overall in the charts, and that's exactly why we are careful to keep note of where it is that they are. Upside momentum, all of this looks upside. We should continue to move and then pull back. These are very cautious regions. We went long in a number of places today and took some profit quickly because we do not want to stay fully exposed into tomorrow. Could it be that it'll move up? Yeah, absolutely, but I am so used to U-shaped and V-shaped reversals that I am simply not going to sit by and just be passive about managing that those groups of positions. So, that being said, that's what we're looking at from upside perspective, 88.31, and then the 88. Oh, would you believe I forgot already? Yes, of course you would, because you know me, and you know that my brain is a sieve. We've got 88.50 to 88.75, 88.78, and then 89. All right, that's it. Falling in. If it collapses here, buyers are still here. Now, if you say to yourself, hey, I'm going to take this trade short. Let's say you look at something like a 15-minute chart and you go, man, this thing's going to reject. I'm taking it short. I know exactly that's what's happening. La, 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 la. Then what you want to make sure is that you have broken support. Guess what broken support means? It means that buyers have disappeared. If the buyers are still hanging around, why would you want to short unless you're going to take it off right when the buyers are going to step in and try to trounce you? Right? I wouldn't do it unless I knew exactly that, hey, listen, these guys are going to show up here. I'm going to get out. Just before they try to muscle me, I'm going to get out. All right, but then that's just 20 cents. What am I going to do? Oh, I don't know. Maybe I'll take the 20 cents. Maybe I'll do something else. For me, not a big fan of playing this formation. Everything here is still showing upside momentum. And so I must wait until I definitively break support, which looks like 87.70-ish. Now, if you say, oh, that's too far, I'm going to take it at, and you take it at 87.90, not a problem if you can corroborate that with faster time frames. If you can't do that, you are rolling dice. And if that's the way you like to trade, then I certainly can't change your mind. It's a lot harder to make a living if you trade based on hunches instead of strategic trading events. And so that's all I'm trying to tell you. If you choose to take a trade early and you've got no corroborating evidence of a breakdown, you are essentially not trading anything but what it is that you are thinking, which is not a strategy. Just, it's important that you understand that. If you're cool with that, not a problem. All right, so that's it for me. It'll come right into, short action could go into, come into the top of the gap, 87.24. Be very cautious. I am very cautious to the north, really sort of tiptoeing in. I'm not letting it go by me and say, oh, I'm not trading that. I am going to trade it, but I'm going to be very risk sensitive to everything that I step into. All right? Good luck trading. I'll see you all tomorrow.